The terrible irony is that we made Fannie and Freddie to share with Americans the right to own a house, the right to buy. And instead, we've caused many Americans to lose their house.
Just as ironic, even though taxpayers had to inject more than $135 billion into Fannie and Freddie, and shareholders were all but wiped out, these institutions remain as indispensable as ever. That's because few investors today will fund any mortgage that doesn't come with a government guarantee, which Fannie and Freddie now explicitly provide. Coming up, a blue-ribbon government panel spent 18 months and $10 million to learn the cause of the financial crisis. Did they get to the truth or duck it? $11 trillion in wealth evaporated in the financial meltdown, which began with an unprecedented number of mortgage defaults. Mortgages that had been repackaged and resold around the world. So why did the financial system fund so many risky mortgages that caused the economy to crash when the housing market slowed? This Northern California farm was supposed to be Charlie Smith's slice of heaven.
I have 10 acres here with house, barns. It's a nice little ranch.
A retired Air Force Chief Master Sergeant.
I got 7 of these air medals.
Smith paid $850,000 for the place in 2004. He says he put down $600,000, basically everything he had from his savings and the sale of his old house.
Come on.
And he borrowed the remaining $250,000 from Bank of America. Meanwhile, Northern California real estate was going up and up and up. He says it seemed like every day he got a letter prodding him to use the equity in his farm for other things.
Then they kept sending me these things in the mail to use your equity to go on vacation. You know, use your equity to buy a car, all kinds of stuff.
Smith ultimately came around to the idea. You can't take it with you. So he went back to Bank of America for a $350,000 home equity loan.
So I got a loan to fix up my house using my equity. I've been on vacations using my equity. I bought a new pickup using my equity.
The mortgage was an ARM, an adjustable rate mortgage with lower payments for 5 years. Smith says he was told that before his rate adjusted up, he could simply refinance again. Then the bubble burst. His home was suddenly worth $500,000 less than he paid for it.
You owe more than your property is worth, therefore you can't refinance back.
Charlie Smith is hardly alone. The question is, how did the American financial system lend so much money to so many people who turned out to be simply unable to pay it back? The 10-member National Financial Crisis Inquiry Commission set out to answer that.
I think the critical finding that we had was that the financial crisis was avoidable.
Byron Giorgio is one of the 6 Democrat appointees who served on the commission.
What could have prevented it?
Had there been significantly greater accountability in the private sector, had there been significantly greater actions taken by regulatory agencies which were responsible for the safety and soundness of the American financial system. And a lot of people made a lot of mistakes in both the private and the public sector that led to this crisis.
The commission blamed predatory lenders, greedy Wall Street investment bankers, compliant ratings agencies, highly leveraged hedge funds, and a history of government rescuing poorly managed financial institutions seen as too big to fail.
They have blamed Wall Street and they've blamed the private sector, they've blamed predatory lending, and none of that stuff is supported by any kind of data.
Peter Wallison, the former Treasury Department lawyer who now works at the conservative American Enterprise Institute, was one of the 4 Republican-appointed commissioners. All voted against the majority report, but Wallison wrote his own dissent.
When you hear people say, this is obvious, this could have been prevented with regulation, you say that's just wrong?
It's completely wrong. Let's assume that the regulator had gone to Congress and said, I think I need authority to stop all this subprime lending. And the people in Congress would have said, wait a minute, show me the numbers. What's wrong with this subprime lending? And in fact, the regulator would not have been able to show any numbers about any serious defaults. The defaults were not occurring. And the reason they weren't occurring was because this bubble was growing.
That bubble was created, Wallison argues, by one overriding cause: federal affordable housing policy, which pushed government and government-controlled institutions to fund loans for weaker and weaker borrowers with smaller and smaller down payments. That, Wallison says, led directly to the creation of 27 million subprime mortgages, half of all mortgages in America.
So you're essentially saying no matter how greedy or how short-sighted or how stupid Wall Street financiers could be, they couldn't cause a crisis of this magnitude by themselves. Is that right?
Oh, clearly not. When you get through looking at where all these mortgages came from, 2/3 of them came directly from or can be traced to government requirements. The government requirements made many of these institutions, Fannie Mae, Freddie Mac, FHA, other financial institutions that were subject to government control, required them to make these loans.
But how does that lead just about everybody in the industry to throw trillions of dollars at all of these borrowers who really never had a chance or a belief that they were going to pay it back?
The reason that developed was that home prices were going up. It then became possible for someone to sell the house or to refinance the home and avoid default. When investors saw that, they thought, these are going to be good investments. Now, most bubbles last 3 or 4 years. This bubble lasted 10 years.
Wallison believes the commission wanted to minimize the role government housing policy played in the financial crisis.
The management of the commission, I will say, was unwilling to hear any information that was not in accord with the standard narrative that the crisis was caused by the private sector, by bad management and greed on Wall Street, by the fact that regulators were asleep at the switch, by predatory lending, by derivatives, all of those things. That's all they wanted to hear.
So you think there were topics that purposely weren't looked into by the commission?
Oh yes, definitely. There were many, many issues that weren't looked into or weren't looked into in sufficient depth.
How seriously did the committee consider Wallison's argument?
Well, we looked very carefully. There's a certain element of truth that the government was promoting homeownership. I'm not trying to let government policies off the hook, but it would be a mistake to think that that was the only cause.
The difference of opinion is more than academic. If Wallison is right, we should reduce or eliminate government involvement in the housing market. He calls the new Dodd-Frank Act, with toughened financial regulations, legislative overreach and unnecessary. If Byron Giorgio and the majority are right, a stronger government hand in residential mortgage markets is exactly what we need. And it's what we're getting. But Giorgio says we're not out of the woods yet.
You went through a lot of hearings, a lot of testimony, a lot of time on this issue as a commissioner.
Right.
Are you now optimistic that the country will never go through this again?
I wish I could be more optimistic than I am, frankly.
Which brings us back to Charlie Smith, whose story is not over yet.
I've lost my standing in the community because I have bad credit.
One of the government's answers? A new mortgage modification program that some say has become another disaster.
I have 4 kids, and I can't talk about that because it really upsets me.
That story after the break. Polls show most Americans oppose bailouts. When President Obama announced the government would pay to help reduce some borrowers' mortgage payments, that helped spark the Tea Party movement. Now a Fox News investigation into that mortgage program raises even more troubling questions. Connie Palais-Yabro and her husband Jason bought this home just outside Hartford, Connecticut at the height of the bubble 4 years ago.
This is where we wanted to live. It's a neighborhood we like. It's a school system we love. My husband grew up in this town. We had our heart set on that.
But Connie lost her job with a health insurance company just about 1 month after closing. And Jason's construction income wasn't enough to cover the bills.
We managed to still make our payments. We went through our entire savings, we went through our children's savings, but it just got to a point where it was really tough.
And then came hope.
Through this plan, we will help between 7 and 9 million families restructure or refinance their mortgages so they can avoid foreclosure.
The Home Affordable Modification Program, or HAMP, was funded with $50 billion from TARP, the Troubled Asset Relief Program, the massive economic rescue plan passed in 2008.
How many of you people want to pay for your neighbor's mortgage that has an extra bathroom and can't pay their bills?
HAMP was the spark for the famous TV rant that gave the Tea Party movement its name.
We're thinking of having a Chicago Tea Party in July.
In fact, Connie had never missed a payment, but she needed a lifeline.
Government's offering all this help for people in our situation, so we thought, why not? Why not call and see if we qualify?
She says her bank, Chase, told her the fact she hadn't missed any payments was a problem.
They told me that they weren't going to look at our application because we weren't one of those people who were already in default. That's why they suggested to me on the phone that day that I fall behind 30 days.
It seemed odd that her bank was suggesting that she stop paying on purpose. In fact, borrowers can be current and still get into the HAMP program, but they have to prove default is imminent.
Come on, Annie.
Still, Connie's story was one we heard repeatedly from borrowers, like Bank of America customer Charlie Smith.
They said, default, get a few months behind, put in the paperwork for the mod, and it'll work out.
We've spoken with people who were told by their banks that the best way for a homeowner to get a loan modification is to stop making their payments. Have you heard this?
We certainly heard anecdotal evidence that that was happening.
Caroline Herron is a former Fannie Mae vice president who left the mortgage giant in 2007, but was called back in 2009 as a consultant when the Treasury Department hired Fannie Mae to run HAMP. Yes, the same Fannie Mae that had to be rescued by the taxpayers.
They probably weren't ever well equipped to manage the program. And once they were engaged, they certainly were looking out for their best interests.
The best interest of Fannie executives, Herron says, not of the struggling borrowers they were supposed to help.
They'd get bonus payments if they met targets on the number of modifications that were entered into, on the number of servicers that were enrolled.
And she says that led to the same type of shenanigans that got us into this mess.
The original goal was 3 to 4 million people. By the summer that the program started, 2009, they weren't close to the goal, and there was a real push to get trial modifications in.
She claims that push included relaxing borrowers' application standards. That enabled HAMP servicers, the participating banks, to sign up more candidates for the program.
So even though some of these people didn't meet any of the qualifications, in order to get to those incentive marks, they would be accepted into HAMP.
Correct. It actually induced some servicers to start taking applications without the income documentation, just like what led up to the whole mortgage meltdown in the first place. And then over time, you'd find the borrower wasn't qualified.
I did speak with a gentleman who made it clear to me that I was approved for the trial modification before the paperwork got to my house.
Connie Peleabro started making trial payments of $1,736, about $600 less than before. It seemed almost too good to be true. If she made 4 straight payments on time, her trial modification would become permanent. At least that's the way HAMP is supposed to work. After the 4 months, Connie says she called her servicer, Chase, again and again, trying to find out if her payment would become permanent. She says she never got a straight answer. But she figured as long as she kept up the payments, things would be fine. 12, 13, 14 months. Then she got this letter. You do not qualify for a modification through HAMP.
So it kills me to know that I let my guard down, and now I run the risk of not having a roof over my head.
That's because, Connie was stunned to learn, when borrowers are rejected from HAMP, they have to pay the difference between their trial payments and their original payments, plus fees. Connie says she ended up more than $20,000 behind. And that's not all.
Additional paperwork was faxed.
They're still reporting negatively to my credit. It's still showing as I'm in default. So by being on this plan for so long, you find yourself in the hole quite a bit of money, and you can't get out.